Hello, welcome to Geojit Spotlight. The US Central Bank Fed's chairman Jerome Powell's speech at Jackson Hole last Friday was widely reported. Powell conveyed some important messages through his speech, which can be summarized as follows. 1. The ultra-tight monetary policy followed by the Fed during the last 2.5 years is over. 2. Time has come for policy shift, that is, interest rates will come down. 3. The war on inflation has been won. Since economic growth is decelerating and unemployment is increasing, monetary stimulus through rate cuts is necessary. Now, what will be the consequence of this shift in the Fed's policy? 1. Declining interest rate scenario is positive for stock markets. Money will move from bonds to equity. 2. There will be increasing fund flows from developed countries, particularly the US, to emerging markets like India through foreign portfolio flows. Equally important is the fact that the coming Fed rate cut will facilitate rate cuts by the RBI. That is, the MPC, Monetary Policy Committee, will be nudged to cut interest rates. In the August Monetary Policy Meet itself, 2 independent members of the MPC had argued for rate cuts. India's inflation rate has been trending down. July CPI inflation is only 3.54%, well within the RBI's target rate. Core inflation is only 3%. More important, the economy is showing signs of deceleration, warranting a rate cut. So a rate cut is highly likely in the next monetary policy meet. Rate cut will be beneficial for rate-sensitive sectors like financials, housing, and automobiles. In financials, banking will particularly benefit from increase in the value of banks' investments. The relationship between interest rates and the price of bonds is inverse. So, decline in interest rates will push up the prices of existing bonds held by the banks, thus increasing the value of their investments. It is important to understand that even in this market where valuations are elevated, banking stocks are fairly valued, even attractively valued. The prices of banking stocks have been remaining depressed because banks have been struggling for deposits. And there is a concern that rising interest rates on deposits will impact the profitability of banks. This scenario of credit deposit mismatch impacting the profitability of banks is unlikely to last long. So banking stocks will be good buys, particularly the large cap private sector banking stocks for a medium to long term perspective.